This is a move in gold that I haven't seen in over 20 years. It looks like it's going parabolic.
This time's different. Right now, we have foreign central banks that are buying tons and tons of gold. China's buying gold. They're not buying treasuries. Russia's buying gold. They're not buying treasuries. All the BRICS buying gold. They're not buying treasuries.
I have a credit creation model for gold price that I have found to be extremely accurate over the last 35 years. And my model says gold over 6,000 by 2028. Nobody is calling to buy bullion. Nobody. This is not a market top. We're not even close. By the way, this is not public knowledge. There is no way that this has been made an announcement. But I guarantee you.
Welcome to the Porter & Company Black Label Podcast, your home for provocative insights that lead to lasting wealth. And here are your hosts, Porter Stansberry and Aaron Brabham.
Porter, it's time for another Black Label show. Of course, this month we're actually going to release 2 Black Label shows because last month I was out. I had some dental things that prevented me from getting the show done. And we're going to release our Black Label podcast from the Porter & Company conference, which was fantastic. My favorite part about that was this was the second year that you had your oldest son, Traveler, up there. And this time he was talking about a great business idea. So I know our subscribers will really enjoy that.
Yeah, I'm proud of my son. He's a senior in high school, and he's just started his first software company. So like father, like son.
Yeah, pretty amazing.
But we've had such a busy month. We hosted our conference here at the farm for almost a week, and then I was at a conference last week in New York. So we've been busy, but we have some really good ideas. Aaron, I think though we should really just jump into one idea in particular, which is the enormous move in gold. I think that the gold and silver are really starting to capture the minds of investors for the first time in about a decade, or maybe longer. I'd say actually I haven't seen a bull market like this in gold since 20 years ago. So really fascinating cycle that we're in the midst of. We have one of the, I'd say the most knowledgeable gold investor in the world about to join us on the show. But to lead into Garrett's appearance here, I want to talk about what I did 10 years ago. So in 2015, gold had been in a bear market for about 4 years, and the sentiment in the industry was the worst I had ever seen it. And I told investors that as a result, they had a free 10-year option, that there was no way that they wouldn't beat the S&P 500 if they bought gold stocks, that you had a 10-year window at least where you would absolutely outperform stocks. And the number one recommendation at the time that I made in that report, it was 10 gold stocks for the next 10 years. The number one recommendation was Royal Gold. Royal Gold is now up 300% over the last 10 years. And I published that report exactly 10 years ago. So 300%. The S&P 500 is up 223%. So you got to outperform stocks, and you only had to buy one thing, which was gold streaming companies. Now there were recommendations in that report that did a lot better. I think our best performing stock in that report is up 900%. But the plain vanilla, the safe stock to buy was this Royal Gold streaming company. And we're going to talk with Garrett more about streaming companies here in a second. But the one thing I want to point out to everybody is there are these very long-term trends in gold sentiment. And gold sentiment last bottomed in early 2000. That's when I first bought my first gold bullion ever. And I paid around $300 an ounce for those coins. I've never sold them. That bull market went from that bottom in 2000 to 2008 when it hit a peak. And in that period of time, gold went up something like 30% a year for 8 years. A huge move in gold. And then there was roughly an 8-year period. So from 2008, 2009 to 2015, gold sentiment bottoms again. And now we've seen this incredible run from 2015 until now. And that's led a lot of people to go, oh, well, this is a peak. I've missed it. And I just want to assure you, you haven't. That what is going on in the global monetary system right now is completely different than anything we have seen since the early 1970s. And I think that we are only at the very beginning of a parabolic move in gold. I expect gold prices to almost double again in the next 3 years. And so I think if you want to maintain your standard of living, if you want to keep the real purchasing power of your savings, you have got to be allocated to gold. And there's nobody better in the entire world than our next guest to explain exactly how to do that in the gold mining sector.
Yeah, Porter. So let's jump right into it. Let's get Garrett Goggins of the Golden Portfolio on to give us all the information that we want and our subscribers want as well.
Garrett, thanks so much for taking the time to be with us today. You are the man of the hour. You've spent your entire professional career understanding the intricacies of the different gold producers and gold streaming companies. And right now you have the attention of every investor in the world. This is a move in gold that I haven't seen in over 20 years. It looks like it's going parabolic. The idea that nothing stops this train in regard to the government's runaway deficit spending is just pushing more and more of the world into gold and out of the dollar. And this is your stage. What does this feel like after a 10-year period where no one could even remember how to spell gold?
Yeah, thanks for having me on, Porter. It's time to roll the gold guy out of the closet, right?
That's right.
But, I started in Boston, MBA, CFA, working for Putnam, and it's traditional investing for the long term. And it just never interested me. I'm like, the U.S. dollar system, what happens when the U.S. dollar continues to get depreciated? And that led me into gold. And, now's gold's time. And if you look at gold based on simple moving averages, 200-day moving average, 3-year moving average, it's high. And every time it went this high, it's been a peak, all the way back for 20, 30 years. But you know what? This time's different. Those other...
wait a minute. Oh, no. Hold on. What's more dangerous, saying this time is different or Kramer saying buy gold?
Exactly. No, I'm there. Like, I struggle with that too, right? Every time you say this time is different, like, it's not. It marks a peak. It's game over. But it is, because the other moves in gold works supported by fundamental supply-demand economics, right? Right now, we have foreign central banks that are buying tons and tons of gold. China's buying gold. They're not buying treasuries. Russia's buying gold. They're not buying treasuries. All the BRICS buying gold. They're not buying treasuries.
And also people with their brains turned on, like the Polish.
Yeah, absolutely. The Polish central bank just added, a few, I think about 100 tons. Yeah.
This is by the way, this is not public knowledge. There is no way that this has been made an announcement. But I guarantee you, the Swiss central bank is also buying gold.
Yeah, no doubt. Switzerland always loves gold. I love going to conferences over there because it's Europe. They all get it. They lived through historical changes, monetary collapses, and the rich dudes over there have vaults in the Matterhorn filled with gold, and they get stock certificates. They invest in a lot of the secondaries for these gold offerings. They don't even want electronic tracking of their shares. They don't want a brokerage account. They will get the money to the broker, whatever, $500,000. They're like, give me the shares, and they put the shares on top of their gold bars in the Matterhorn. It's a long-term way of thinking, and Europeans get it. A lot of Americans don't, because it's like, what's a dollar worth? You ask the average American, and they say $1 worth $1. And then you're like, well, yeah, we all know $1 worth whatever, 32 euro. It's worth, 130 yen, and stuff like this. But what the problem is, the constant devaluation. And, I have 3 kids, and we've seen the prices through inflation, go up tremendously for food, for insurance, for housing. And that's where the average American sees it, in their pocketbook.
Yeah. So I got a bunch of things I want to talk with you about. I really want to know more about the streaming companies. As you know, that's my favorite way to invest in gold. I know it has been yours for a decade or longer as well. I want to make sure our listeners understand what really drives the streaming economics. But before I get to that, I just got to say this before we go, before we get into something useful. What are the odds that Berkshire Hathaway buys gold? Wouldn't that mark the ultimate reversal, and the realization that, oh wow, there is a point to owning it. I'm also pretty sure that the gold prices outperformed Berkshire for the last 25 years, which I think is very interesting. But let's talk about the streaming companies.
Okay, regarding Berkshire, earlier this year, I track all the miners on a fundamental basis. I'm a CFA. I try to buy, $1 worth of free cash for 20 cents of market cap or enterprise value, right? And then I track all the major miners and a lot of the smaller miners too. But Newmont was trading at a 55% discount to fair value based off a free cash to EV formula that I track on a daily basis. earlier this year, and I started going hard on that at $35 an ounce. $35 a share. Now Newmont's up at 90. And then, these rallies continue until the miners are over like about 60% overvalued based off free cash flow. And we're not there yet. Gold keeps driving more and more value into the shares. And then my prediction was, Buffett's coming for gold, Buffett's coming for Newmont, because the Buffett indicator, right, at an extreme high, it shows this secular shift between overpriced growth and underpriced real assets like gold miners, all that. And this secular shift, it lasts 10 years, and we're only it hasn't even corrected yet, right? So we're only a few months into it. So we expect this to go on for a long time.
And what about let's talk about the streamers. I've been recommending Franco-Nevada for probably 20 years, and the reason why I like it is very simple. It is a leveraged bet on the moral turpitude of the United States government. And I think that's a one-way bet. And would you mind just explaining how these companies actually work? I know you're the leading source of research on all of these companies.
Yeah, no doubt. I've been a mining analyst for over 15 years. I've covered the royalties every year. We did a special issue twice a year, and I kept on seeing the royalties go up. I've kept on seeing this sector consolidation where all the small fish, eat all the big fish eat the small fish. I'm like, what if you just made a royalty portfolio since back to 2007 when Franco got spun out? You'd be up 30,000%. That's like 34% CAGR. That's better than Buffett owning all the royalties. We've just seen 3 acquisitions this year. We saw Sandstorm get acquired by Royal Gold. We saw Elementa EMX get purchased by Elementa Altus. Origin, one of my favorites, was acquired because they had a tremendous 1% NSR. But royalty specifically, they are inherently structured to outperform. Why? Because they have fixed costs, right? When a miner's building a mine, it's like, here, I'll give you $100 million. You give me 1% of your NSR, net smelter revenue. So you get 1% of the revenue for the life of mine. These contracts are done at analyst consensus gold price, which is usually about 20 to 25% less than the current gold price. They're getting deals done at $2,600 when gold was at $3,000. So right off the bat, they're getting a 20% bump. They have free exploration upside as the miner finds more ore and mines for longer than a 10-year life of mine. They get all that for free. They have fixed costs.
Lots of optionality.
Huge
of free optionality. Yeah.
They get all the upside for free because their original payment doesn't include much that exploration upside. Limited management. You can run a royalty company with 3 to 4 people. You get a lawyer, you get an accountant, you get a geologist. That's all you need. If you look at revenue per employee, it's better than some of the amazing tech stocks. And then the ongoing sector consolidation, right? Just the big fish always eat the small fish. Whenever the big guys are focused on 200 million deals, 500 million deals. The smaller guys are scooping up assets. Origin paid $100,000 for their Silicon Merlin property. They ended up selling it for like 12 mil, and then they retained a 1% NSR that they got another 250 mil. They turned $100,000 into $350 million. And that's why, that is straight shareholder value. That's why the royalties outperform. The miners don't do that. If you look at the average miner, the only thing with the share price is growing free cash on a per share basis, moving profits on a per share basis. If you track that versus the share price, it goes tick for tick. Miners have trouble doing that because, they might increase production, they might increase revenue, but they're paying so much for an asset, they're spending so much in CapEx, they never get their money back.
Yeah, that's right. The two things that I have seen about mining is mining does the best when the ratio between gold and oil is at an extreme. And right now, I'm not sure if it's exactly at an all-time high, but relative to oil, gold has rarely been this expensive. And so miners take energy and they produce gold. Their main input cost is energy. And so if energy is cheap, and energy is cheap right now, their margins are going to be very high, which is going to lead them to have some free cash flow. The sad part, I think you would agree, is many of the miners are going to spend all that money on just buying more dirt. And that, of course, is the huge advantage of the royalty companies. They don't have any capex, so all of their profits end up being distributed to the shareholders, whereas a lot of the profits, probably at least 30 to 40% of the profits of the miners, have to go back into buying more dirt. I was at a conference this week in New York, Jim Grant's fall conference, and I had the opportunity to sit down with Pierre Lassonde for, I don't know, maybe 15 minutes. It wasn't like a private meeting or anything. We was just at a conference talking with him, and I asked him, I said, for those listeners who don't know, Pierre Lassonde is the founder of Franco-Nevada. He's the most legendary guy in the gold business of the last 30, 40 years. They bought their very first royalty. They bought at Franco-Nevada. You probably know the details. I don't remember the name of the mine.
I'm sure.
He paid something like $2 million for it, and they generated something like $200 million in revenue from it. Extraordinary return.
Much more than that. Yeah, like $500 million.
Billions.
Gold Strike's still worth another $500 million. They're going to get $1 billion of value from that $2 million investment. He and
one of the greatest investments of all time.
Yeah, absolutely, no doubt. Royalties are the greatest investment of all time, and they're diversified, right? They take a lot of small bets, and they own a portfolio of 200, 300 small NSRs. All they need are one or two to get hit to hit in order to get lucky. Versus the miners, they get one mine or two mines. One of those mines goes down, the stock's done.
What I was asking Pierre about is, has he ever tried to figure out what the algorithm would look like between what a royalty company's earnings are worth relative to a full capex company's earnings? And if you will, just call regular companies operating businesses, and then we call the streaming companies royalty companies. How much more, if I said if I've got $1 million in earnings from a royalty company, what should the multiple be relative to $1 million in earnings from a regular operating company with, say, 30 cents on the dollar capex requirements?
It's triple. The reason why you do a NAV discounted cash flow calculation, right? If you discount $1 at 5%, which is the traditional discount over 10 years, $1 per year equals $7.50. That's a 7.5 multiple on $1. That's what the average miner trades for. The average royalty trades for 20. Franco's starting to get up there to 21, 22. Wheaton trades at 22. And let me tell you this, the reason why they trade at 20, because if you do that same stream and you do it at 5% in perpetuum, it turns into $1 turns into $20 in perpetuum.
Yeah. And so of course the duration makes a big difference to the formula. I understand that. I was working on it with him at the conference, and we came up with 1.3 times, which is interesting because that's exactly what the market is telling you. And that was just back of the napkin math. It wasn't, but I think that'd be a very interesting thing to know, because ultimately, if you want to invest in gold, you have two real primary choices as an equity investor. You can invest in operating businesses, or you can invest in the royalty companies. And kind of knowing which one offers you more value is interesting. But of course, it all has to do with duration, because if you have an unlimited time frame, then the premium on the royalty companies quickly moves to infinite, because they have such a higher return on invested capital. And if you start doing the math of reinvesting so instead of just saving 30 cents on the dollar every year in capex, if you reinvest that 30 cents into the high ROIC business, you get these compounding effects, which is why the very best structure is a royalty company that uses all of this free cash flow to buy back stock.
Yeah,
and those returns can quickly become parabolic.
Absolutely. And one of the beauties, after covering the miners for 15, 20 years, the cancer of the mining industry is dilution, right? Whenever they have to do a financing or raise capex or to do an acquisition, they usually do it in shares. So you have companies that start out with 100 million shares, and now they have 1.2 billion shares outstanding. The royalties, they rarely issue shares. They don't have to, because they're so cash rich. They're just reinvesting their cash.
They're going to go borrow money to buy a royalty. They're smart enough not to issue shares to do that. So listen, I want to finish up with just what I think is just one of the great stories of the gold business in the last, 25 years. Pierre Lassonde and his partner built Franco-Nevada from scratch. They created one of the greatest businesses in the history of capitalism. And in 2003, correct me if I got the year wrong, but roughly 2003, Newmont decided to buy it. and they paid something around $2 billion. It was $2 billion and change. Okay, 4 years go by, and in late 2007, they decide, you know what? We've made a mistake by buying the greatest business of all time. It's not core to our business model. We're going to sell it. So they call Pierre back, and he says, "Sure, I'll buy it back." They spin it off to the public for about $1 billion. So they lose $1 billion by owning the greatest business in the history of capitalism. They give it back to Pierre's team, and as you know, the IPO was in 2008, and since then it's done something like 19% a year equity returns. I mean, it's just been a barn burner, and until this recent run, I would say that Newmont's shares probably were flat the entire time.
They were flat. Yeah, if you look at gold versus the miners and gold versus royalties, the average gold miner underperforms by a significant amount. You're better off buying gold until this large run up. Agnico's the only one that beats gold.
You're right. And that's the other thing I wanted to tell people. If you guys don't know anything about gold or gold mining, I think the two best management teams in the gold industry are Agnico and Franco-Nevada. And so, you know, if you're going to be an investor in these businesses, those are two that you can definitely hold for the long term. Those are the ones I know. Are there any real all-star management teams that are up and coming? Because, you know, gold's been such a challenging industry, and it's been so out of favor for so long. The people who are graduating top of their class from Harvard and from Stanford, they're not dreaming of being gold miners, right? So I don't really think that most mining companies are staffed by the very best and the brightest. Agnico's management team is incredibly impressive, and so of course is Franco-Nevada's. Who else is out there that I should know about?
Yeah, let me tell you one thing about Agnico. The reason why Agnico outperforms is because the management is focused on grade. Grade is the only thing that moves the needle because mining on a per tonnage basis is fixed costs. So the only way you can increase your profits is through grade. You're getting more ounces out of the tons that you mine. And Agnico's always been focused. They have the highest grade resource out of the whole industry. And they take a lot of smaller bets and a lot of developers. And then they get involved and, you know, they're not paying very much for acquisitions. They're not paying very much for CapEx. They are focused on driving free cash on a per share basis. The average large cap miner, it's run by, you know, boards and committees, and they got to be politically correct, and you can't, you know, do anything that, you know, stirs the pot. So, you know, they cater towards the safe jurisdictions, and safe jurisdictions, you're paying up, you know, 5x, 10x for the asset, and they'll grow revenue, they'll grow production, but earnings on a per share basis, you know, remains the same. You know, the management is one of the most important things for mining companies. But I know all the guys, you know, they're in Toronto, they're Vancouver. It's a very close-knit group. You know, there's good guys, there's bad guys. After doing it for a long time, I follow the value creators in the industry. And there are some significant value creators. There's a guy, Alex Black. He found a Rio Alto. And Rio Alto, they had Shahuindo and La Arena and built it, heap leaches in Peru. And that company got acquired by Tahoe. And Alex just started Rio 2. Rio 2 is going to be in production by the end of this year. It started at 20,000 tons per day. It's a run-of-the-mill heap leach operation, which means all you got to do is take a shovel full of dirt, put it on the heap leach. There's basically nothing that can go wrong. And I look at NAV value, like what is the total lifetime after-tax profits from this asset? It's like $2.5 billion. Rio 2 trades for only $500 million. One of the dirty secrets about mining companies is, do you know when they're worth the most, Porter?
Yeah, I think usually right after the final decision to build the mine.
Yeah, it's in first production when the cash begins to flow, because when cash begins to flow, they move from NAV value to free cash at 7.5 multiple. But then as they mine, the reserves drop, right? So the equity value depreciates over time. This is why traditional investors hate the mining industry, because at first production, miners are worth the most. And this Rio 2, their Phoenix mine, is going to be in production in a couple months. Stock trades at 500 mil. It's worth 2.5 bill. I'm surprised that outside investor from the gold industry hasn't gotten involved yet, because it's 100% ROI. And Phoenix scales to 80,000 tons per day. Like, it's the biggest layup I've ever seen. And he's going to fund the growth through cash flow. He's going to avoid dilution. But let me tell you one more thing. Do you know Paul Singer, Elliott Management?
Yes, of course.
Paul Singer is a traditional New York investor. He manages billions of investor wealth, stocks, bonds, diversified. He's a gold bug, and he knows being a gold bug doesn't bring the assets in, but he knows the royalty industry is the best way to invest in gold. So he started Triple Flag a few years ago. He hired the CFO of Barrick, Sean Osmar.
That's on our buy list as well.
Yeah, and Triple Flag, he owns like 50% of Triple Flag. It's the largest holding in this portfolio. So he's a smart guy. He understands royalties is the best way to go. But yeah, there's management teams. You got to follow the good ones, and you got to follow the cream of the crop upcoming projects, the world-class projects. A lot of people invest in the gold sector looking for that big speculative runoff from silver going from 20 to 100, from gold going to 2,500 to 10,000. So they're investing for the 1% of the time. And in 1% of the time, the dogs fly. The worst, lowest grade, unprofitable miners will go up 2x, 3x, 4x. But what are they going to do when they run up? They're going to sell more shares. And
that's right.
The thing is, when inflation pushes gold higher, it pushes costs higher as well. So a project that is uneconomic at $2,000 gold, it's going to be uneconomic at $4,000 gold because the comps are going to be higher. I invest the 99% of the time. The miners that generate free cash and drive profits and increase profits on a per share basis. So, I just look at the rising gold price and silver price as, the cherry on top of the value creating ice cream sundae.
Well, Garrett, you're the best in this business at what you do. And, sooner or later, we want you to join the team here at Porter & Company. But in the meantime, how do my folks get some kind of a trial subscription? How can they start and really see the value that you add to the investment process?
Yeah, so I started the Golden Portfolio with my Golden Portfolio product. It's all the royalties. Royalties outperform, as we know. And I started it 2 years ago, and it's performed as well, if not better than expected. I am my GP, my Golden Portfolio 10X, smaller explorers and developers, and the Trost of the Lassonde curve that are undervalued, trading at 30% of fair value. And let me tell you one more thing, Porter. A lot of these developers, they've gone up 200%, 300%, 400%, right? And you look at a line on a chart, you're like, oh, how can I buy this? But what's happened is the rising price of gold has driven so much value into their underlying project that these developers are as much, if not more, discounted than they were when gold at 6 months ago. The value was off the charts. And then I started an introductory product, right? My front end for the newsletter industry. I didn't really want to do it, but I had to get people in. I started my GPID, my favorite, 4 or 5 picks. Origin was in it. Origin got acquired. That portfolio is up 505% in less than 2 years. Like, it blows away all the benchmarks. My performance is audited. These are real portfolios. This isn't a stock of the month club. It contains all my picks. And, a lot of the newsletter writers, they just talk about their winners. This thing contains all my winners and losers, and it's audited.
Yeah, well, we do the same thing. We have real report cards, and we audit the performance of our recommendations. But I have to admit, our overall portfolio is not up 400% in the last 18 months.
500%. 500.
Sorry, 500%. I thought we were doing really good because our number one ranked recommendations are up about 36% a year since we started. But no, I can't compete with the big move in gold. So what's your best deal for my customers? Aaron, do we have a link that we can get people? Because I would really like you guys to all read Garrett's work. It's the very best in the industry, and I'm sure that we can figure out a price that makes sense, because you're going to make so much money on these gold stocks, and you just have to believe us. This is not over yet. My model, I have a credit creation model for gold price that I have found to be extremely accurate over the last 35 years. And my model says gold over 6,000 by 2028. So we're only about halfway through this move in gold price. And as this mania heats up, you will see more and more gold people on CNBC, and you will see, I can't tell you that you'll see Berkshire buy Newmont, but you will see major investors moving huge amounts of capital into the gold sector. And we haven't seen that yet. We haven't seen any real big sort of outside of the industry acquisition activity, but that will happen.
Can I talk about that for a little bit?
Sure.
All right. So, you've seen a lot of news out there. A lot of gold products, GLD, ETF, GBX, ETF, they're talking about the market cap being an all-time high. But investor assets are not in the sector yet, right? Because market cap is comprised of price times shares. When money comes into an ETF, it needs to create shares. When money leaves, the shares
There's
are
no new shares.
There's no new shares. GDX, shares outstanding, 350 mil. At the peak in 2020 and 2011, it was 450 mil. GBX shares outstanding is at a low, the lowest it's been in 5 years. There's no money coming into this sector. And I say gold.
I'll give you another data point. I know some of the largest gold dealers in the world, and their business is dead.
Wow.
Nobody is calling to buy bullion. Nobody. This is not a market top. We're not even close.
Not even close. So gold's going to continue higher until the masses come. And that always marks the peak. We're nowhere near that. That gives me confidence, as well as following the fundamentals, knowing exactly how much value you're getting for what you're spending.
By the way, at the market top, I won't be able to get you on the phone.
Yeah, absolutely. I hope so.
You'll be way too busy. You'll be the highest paid speaker at every conference. You'll be on CNBC every other morning.
Yep. Let me tell you a couple other things. Regarding gold price, right? We've got Trump and Bissett. They're going to lower rates to 1%. And Stephen Moran's on the Fed, the Mar-a-Lago Accord. They're going to devalue the dollar. So if rates are going 1% and the dollar is going to be devalued, you can't own bonds. Like, this whole flow is
They're not investable.
Not investable.
Mm-mm.
And then, have you heard about the Beaver Creek Accord?
No.
All right. There's a big mining conference in Beaver Creek, Colorado. It just happened 2 weeks ago. I was there. I'm friends with all the CEOs. I was hanging out with my friend Fred Bell, the CEO of Elemental Altus, that just did the acquisition of VMX. Tether. Fred's like, you got to talk to this guy. It was Juan Satori.
Oh, yes. Yes, I've heard rumors about this, but I don't know the details. What happened?
Yeah, it's all from me. Juan Satori is head of special business development of Tether, okay? And Tether just invested a total of 250 mil in Elemental. Why? Because he knows the royalty structure is the best. And he stays away from miners. Tether is buying 2 tons of gold per week. We're talking about Tether dollar, right? That's got 200 billion assets. 5% of their portfolio is held in gold. And Tether gold. Tether gold is all gold. And they're buying their gold. They're holding it in their own vault in Switzerland. This is outside the COMEX, outside the LBMA, outside JP Morgan. It's outside the system. This is the reason why I believe why gold is so strong over the past 6 months, because gold is finally able to trade on true supply demand economics for the first time in over 50 years.
Yeah, that's very exciting. Very exciting. And there's going to be enormous demand for gold as a stable coin backing asset. It absolutely will be.
We were having drinks. It was Paul Brake, the CEO of Franco, the new CEO of Franco, Randy Smallwood, the CEO of Wheaton Precious, and Nolan Watson of Sandstorm. And Fred introduced Juan to all these guys, and they're all members of the World Gold Council, right? That they do all the marketing for gold. Their latest World Gold Council, their latest promotion is it's Elton John. It's Elton John talking about the beauty of gold or something. I'm like, we're like, what are you doing, World Gold Council? Juan Satori told these guys, he goes, listen, Tether gold is going to be bigger than Tether dollar.
It will be.
Because crypto holders, they don't want dollars. That's why crypto was invented. All this money is going to be coming in Tether gold. World Gold Council is trying to do their own stable coin. It took them 2 years just to get out a 3-line statement. Like, they're not going to be able to do it. They're going to adopt Tether gold. You get the Genius Act that's promoting stable coins around the United States.
Exactly.
When that thing got passed, in a few months, we're gonna log into our Chase account, our Bank of America account. You're gonna have your dollar balance right there. You're gonna go click to USDT. You're going to say click to Tether Gold. And like any, famous banana republic around the world, right when you get your paycheck, you're going to convert it into hard assets. And the combination between crypto, being able to be frictionlessly transferred into instantly with no cost, with gold, the world's historic store of value, it's creating the ultimate currency.
Yeah, and it's also, I don't know how they're going to manage this process, because those stable coins are an enormous threat to the banking system.
Mm-hmm.
And say what you will about Trump and Bessett, but they're not dumb. So
Nope.
they're gonna slow roll this, and I'm not sure exactly how it's gonna happen. But my advice is, do your best to beat the crowd. Garrett, thank you so much for being with us today. I've learned a lot just talking with you over this conversation, and I thought I knew a little bit about gold to start with, but your knowledge is really encyclopedic, and I really hope that our subscribers will join you. And I wish you all the best with your new business and with the growth of it. You are a real benefit to the entire investment community, and I'm really glad to be your friend and glad to have access to your insights. Thanks for being
Awesome.
here.
Thank you, Porter. Anytime.
Wow, Aaron. There are people in this business that really, really know their stuff, and it's so much fun to talk to them because, Garrett's probably already forgotten more than I'll ever know about gold mining and all these people and all these businesses, but it really is an insider's club, and it's so fascinating that gold plays such a really important role in the global economy, but there's probably only about 20 or 25 people tops that really control operations and really understand all what's going on in these gold mining companies. It's a very, very small sector. It's very undercapitalized relative to its importance in the global economy. And with Garrett, you're talking to a guy who sits down with these people, 3 or 4 times every year, really knows what's going on and knows the difference in quality between the different companies.
Yeah, and Porter, it's a crazy story, and I know the story too. His ex-employer, which you happen to know who his ex-employer was, right when gold was starting to get back in favor,
Yeah, of course, yeah.
After they had carried this newsletter for so long, they decided to cut his newsletter, which was, I just couldn't believe it. It blows my mind. Anyways, I'm sorry. I don't mean to bring that up and dig anything into you, because you knew. I remember you wrote me an email and you're like, if they let this newsletter go right now, this might be one of their dumbest bonehead moves. Well,
nobody ever listens to me. That's for sure.
why would they do that?
Yeah.
But yeah, no,
but
Garrett,
listen,
it's great.
Sorry, I didn't mean to interrupt, but I just, geez, I was going to say something really interesting. Oh, I just wanted to say that Garrett told me something that I did not understand. And that's what I love about sitting down and talking with people who do something like this so intensely for so many years every single day. And that is, I really did not understand what Agnico's advantage was. I knew they had better management team. I knew they did a better job with asset allocation. But I did not know that the secret to why they outperform all the other gold companies is because they focus so much on grade quality. And for me, that was like a light bulb coming on. I'm like, So now when I do any kind of analysis on a gold producer, I'm going to focus on the quality of the ore. That's going to be my number one metric. And I'm so grateful that I learned that from that discussion. And I hope you guys all picked up some big pointers. I would say now, having heard that, the 3 most important things for gold investors are, number 1, you're not going to beat the streamers. Number 2, if you're going to own the producers, make sure you understand the ore quality. And number 3, make sure the management team has a great history of capital allocation. And I can tell you what good capital allocation doesn't look like. Newmont.
Yeah, that's right. Yeah, and Porter, you mentioned, are we going to have something for our subscribers? Absolutely. There's a URL that they can go to. We'll also email it out. It's goldenportfolioporter.com.
goldenportfolioporter.com. I like it. It's a URL that I can remember.
Exactly. That's what we're trying to do over here. So that's actually, we'll go to Garrett's, what he mentioned, his kind of front end that's up 500%. So I think that he's doing pretty well with that. And as you said, and you've written about, you had a fascinating piece recently, which was you had these 4 metrics of how you were going to estimate gold going forward. And it's not going down. It's going up every year.
Yeah.
Period.
No. Yeah. I was taught a really cool algorithm by the Austrian economist in the late 1990s, Kurt Rischebacher. And his theory and the school's theory is that gold is the natural monetary base. And so as people print dollars and create new credit, it de facto drives the gold price up. And Austrian economists and the world's most elite bankers have known this fact, of course, for hundreds of years. But getting the data on total global credit creation was very difficult for a very long time. And that gave bankers a tremendous advantage in understanding prices of things. So that advantage is now available to anybody who wants to simply look at the aggregated data, which is published by all kinds of people, the World Bank, U.S. Treasury, et cetera. It's not hard to get the numbers now. And so you can actually create very accurate global gold forecast pricing models. And if you look at the thing that I published on X, you can see this model has predicted the gold price very accurately for the last 35 years. And it's saying that we'll see gold over $6,000 an ounce by the end of 2028.
Yeah, and most of our listeners are certainly on our daily journal. However, if you're not, you can go to portersdailyjournal.com and subscribe for free. We give you tons of fantastic value, and you posted that piece on there. And of course, Porter, your X account is at Porter Stands B, the letter B, Porter Stands B.
Yeah, I wanted to use my whole name, but they only let you have that many characters, so it's Porter Stands B. And then, I hope you guys will check out that work I've done on the gold price. I think it's the most intellectually rigorous model I've ever seen for gold pricing, and I happen to know that it's been in active use for a couple hundred years, so it definitely works.
Yeah, and anyone that's out there that would like to give us some feedback, I'd love to get your feedback on Garrett, gold bugs, any kind of questions that you have, things like that. Podcast feedback at porterandcompanyresearch.com. Podcast feedback at porterandcompanyresearch.com. That's our filter to see if you're actually committed to writing to us and getting in, because it's not easy to get through that URL, through that email.
We like to make things challenging for people.
Yeah, we certainly do. All right, Porter, that's our show for this week. Thank you so much. It's great to see you, and I'll talk to you next month.
Thanks, Aaron. See you, everybody.
Thank you for listening to the Porter & Company Black Label Podcast with your hosts, Porter Stansberry and Aaron Brabham. We'll see you soon.